Good morning and welcome back from the break. I hope you're all refreshed, and greetings from Luxembourg. It is a fairly dreary day here in Luxembourg. It's foggy and misty. I'm Carmelo Cocuzza from the EIB's Technical Assistance and Blending Division, and I'm very happy to join you for this panel on digitalization, which is also been mentioned earlier this morning by the EU ambassador as one of the key priorities also for the EU. So digitalization is something that we're all talking about. And if I can use yesterday's expression, if there is one silver lining that has come out of the past 1.5 years of the COVID pandemic, it is perhaps the pace at which digital transformation has accelerated across the globe. In many cases in Africa and other emerging markets, allows countries to leapfrog into a completely new dimension. And just looking at the health sector, for instance, the WHO reports on how COVID-19 has led to an unprecedented demand for digital health technology solutions. For example, from tracking the level of infection to population screening, or from vaccines and medical resource allocation to targeted response design. I mean, you would never have thought that 2 years ago you would still be using a QR scan in order to access flights and airports, or even to book a place in a restaurant. But this has become now a reality for so many of us. Obviously, one can look at all the developing, the opportunities that have come up from the developing and digital economy across the continent, but also in terms of improving the lives of the people. And the opportunities have never looked better. We must acknowledge that there is still a long way to go, though. Why? Because in terms of connectivity, we still have 900 or so million people who have yet not crossed the digital divide. That means they have not yet have access to internet, either because they reside in very remote areas or because the infrastructure is not yet available. And this is obviously has some social consequences because it matters in terms of boosting the economic development of the countries involved. The ITU, the International Telecommunications Union, estimates that just a 10% increase in mobile broadband penetration could potentially lead to a further 2.5% increase in a country's GDP. And that's in relative terms. And the World Bank study, also on connectivity, reports that in order to achieve a universal, affordable, and quality broadband access in Africa by 2030, some $100 billion of investments are required over the next 10 years. So of these, they foresee that 80% should be dedicated to capital expenditure and operating expenses in infrastructure such as optic fiber connections, 4G and 5G mobile network enhancement, servers and data centers, while 20% should be dedicated to ICT skills enhancement and the development of local digital software solutions, as well as to establish a more appropriate policy and regulatory frameworks conducive to digital transformation and investments. And the EIB contributes towards the digital economy through direct and indirect lending in Africa, which ranges from things like biometric identity projects in Nigeria to submarine optic fiber cables in Mauritania, and to also mobile manufacturing in Rwanda and fintechs in Egypt and Ethiopia. Apart from connectivity, our main areas of intervention tend to focus on infrastructure needs, because without the optic fiber cables, without the internet, you're not able to connect the population. But also in terms of innovation and entrepreneurship in digital solutions, because without the software, you're not then being able to run the engine. Particularly in the case we are looking at today is financial sector and financial inclusion that will enable more affordable and wider access to financial services. But also we look at data protection and how the financial sector with regards to digital payments and cybercrime. So how to protect the financial sector with the cybercrime that covers data protection. The EIB can support also in terms of technical assistance and capacity building. And we not only offer to procure advisory services to governments in terms of formulating national digitalization strategies, for instance, or regulatory frameworks, but also in terms of cybersecurity strategies. We can also offer advisory support to the banking and microfinance institution in terms of digital investment planning, training, and capacity building. Which actually brings me now to the topic of the session, because it's actually to provide you a presentation on the initial findings of the EIB feasibility study, looking at the digital investment needs of the banking sector in sub-Saharan Africa. The study is currently being conducted by Deloitte consultants, and I'm very glad to have here with us Dr. Aymen Mtimet, who has joined us. He's the Director of Advisory Services at Deloitte Afrique. Thank you very much for joining us, Aymen. But before I give him the floor, allow me to introduce my colleague, Claudio Cali, who is a senior economist at the EIB, who will update you on some of the findings from our own internal research that we conducted this year on digital applications by our partner banking and microfinance intermediaries across Africa. The findings will soon be published in our Finance in Africa 2021 report, and you will find a link to access the report in your swap card. After they have provided a presentation, I will then take any of your questions from the audience. So feel free to post your questions on the portal, and we will dedicate the latter part of the session to Q&A. And now I'd like to hand over to my colleague, Claudio. Thank you.
Thank you very much, Carmelo, and good morning, everyone. Really happy to be here. What I'm going to do in the next 15 minutes, I'm going to give you some findings and present the key results of the Finance in Africa report. As Carmelo said, this is a regular publication that we produce in the economics department. It ranges across financial sector developments in Africa, mostly covering banks, private equity, and microfinance institutions. The unique feature of this report is that it draws on findings from the Banking in Africa survey, which is a survey that we run amongst our clients. And again, thank you very much for the many of you that contributed to this exercise in the past. And as Carmelo anticipated, publication will be on the 18th of November. If you want to know more, please check the website that is available on the conference website. But let me give you an introduction about the mobile banking and mobile money in sub-Saharan Africa. As you're familiar, Africa became a world leader in this type of services throughout the years. So I think that from 2015, as you can see also from these graphs, the value and in absolute terms, in numbers of mobile money payments shoot up at more than 200%. Just to mention few stats, official stats from the GSMA, Sub-Saharan Africa it represents 53% of mobile money accounts worldwide, and also 2/3 of worldwide transactions are processed in the continent. And what was interesting to see was also that this mobile money services, they went hand in hand with banks services. What does it mean is that we saw a bit of complementarity of fintechs and big techs, because they went where the demand was basically unmet, because the ability to connect with a phone or via internet made it possible to reach underserved groups and underserved markets in remote areas where banks were not present. And I think that was one of the reasons why there was such a rapid uptake of mobile money services in the continent. And again, they went hand in hand with banks, bank services. This slide, we put these slides here because we wanted to show you that also from previous research, what emerged is that the alternative credit solution and digital payments are really very important on the continent. And it's not just, in terms of the continent overall, but also by single countries. What you can see here, in fact, is that the 4 countries out of 10 are at the highest percentage of total alternative credit vis-a-vis their domestic credit market. And what's also more interesting is that they are the biggest amongst the 10. So we can see that Tanzania, Kenya, Ghana, and Uganda, they are well above the levels of China, US, UK. So that means that really Africa and the East African region is playing really, they're like front runner in this digital revolution. But let me zoom in on the key findings of the Banking in Africa survey. So what we found is that banks do offer digital applications, and these digital apps take the form of mobile app or internet banking. These are quite widespread. And what they offer in terms of services is also quite interesting, because the majority of services offered are payments, digital payments, and it's not just consumer to businesses. So we're not just talking about customers paying in shop, but also it's like B2B. So banks are allowing companies, their clients, customers, to pay suppliers and distributors. What we would see also is that there is a little slightly uptake in terms of services such as opening a bank account or extending a loan, but these are primarily done physically. And there are some reasons because we need also digital identity, and of course, that requires a bit of time. So this is why these services are mostly based physically for the time being. Looking at the transactions, so we asked banks what was their how much of their transactions were processed digitally, their customer transactions were processed digitally or in a physical way. And of course, what emerged is that physical transactions still dominate. 1/3 of banks basically reported that less than 20% of their transactions are processed on a digital channels. And if we zoomed in the various type of customers, what we see is that the SMEs customers lag behind retail and corporate clients, which means that they process a lower number of transactions via digital channels. I believe you already saw the slides yesterday, and as my colleague Ricardo mentioned yesterday, what we saw is that the main drivers that to this digitalization efforts was really, they highlighted the importance of customer centricity for banks. And in fact, banks value a lot the importance of updating and upgrading their services to improve the customer experience as well as attract new customers. And lower operating cost was actually, the third factor highlighted amongst the drivers. Looking on the, let's say, less brighter side, of course, risks are there. And in fact, cybersecurity was pointed out as the biggest risk, followed by lack of IT infrastructure and also increasing competition from telecom and fintechs. That brings me to a bit we in this report, in this study, we also try to identify some sort of key trends and future prospects. And of course, I'm talking to an audience of financial institutions, so you know this very well. Digitalizations was there already. It boomed with the COVID because of the prolonged lockdowns. So we had to switch everything into digitally. But the good thing is that benefits are there. And so that's why digital is here to stay. And this is what is recognized by the majority of banks that we surveyed. Of course, since this is going to be a permanent shift, what does it mean? It means that we need to make sure there is no one left behind. I think that Carmelo mentioned that at the beginning, but I think that we need to be careful in keeping in mind that we have a digital divide, and there is a risk of digital inclusion. That means that services such as technical assistance, advisory services are very important. We see that already that our banks are offering this. In fact, 70% of banks already offer this sort of like training to their clients. And but this is not just for the clients of our banks, it's also for the financial intermediaries themselves, including ourselves, since we are like, a bank too, because what we need is that this shift will be permanent, investments will be done. That means that a fine-tuned digitalization strategy is needed. And this is why technical assistance is required from that side too. Of course, regulatory environment and the entire ecosystem needs to be there, because if we want to send like a mobile payment via an app, it means that we need mobile broadband coverage, for instance. So we need the digital infrastructure and we need investments in network connectivity. We need technical assistance, but most important, we need the regulatory framework in there. What does it mean? Because I showed you before, alternative credit solutions are taking over. They are increasing. They are not major yet, but they are becoming a thing in many countries in Africa. And that means that we need to regulate and make sure that like consumer protections is there, that appropriate regulation against like cybersecurity threats is there, so to minimize the risks. And of course, what we saw and what would be actually, I would be very interesting into hearing from you, because you're really on the ground, is this competitive forces between like fintech and big tech. So what we see now is that they are growing, they are expanding, but they are mostly cooperating. They are partnering with banks as well. And this is like, for us, is mostly because there is lots of demand and they are tapping into this unmet demand. But what we see going forward is that competition will grow. So the more in the next year, we will see competitive forces increasing also in the big tech and fintech spaces. And let me conclude by, just mentioning what is the role of institutions like the EIB. We support both like private sector development and financial sector development across the world. And of course, digital economy ranks high on the agenda, especially in the region. We already invested and approved 600 million euros of projects in the digital economy space, which means we invested in infrastructure projects such as like network connectivity, but also we try to offer investment products to our financial intermediaries via intermediary lending to banks and MFIs, but at the same time also taking equity stake in venture capital fund that can support fintech and the innovative startups. And again, let me stress again the importance of advisory NTA services, because every time we invest and we provide financial resources, we also offer TA services, because this is a key for us to achieve our objective, and especially in this case to improve and promote digitalization of financial services. I'm gonna stop here. Thank you very much, and I'll hand over to Carmelo. Thanks.
Thank you very much, Claudio. And I think yes, we've stretched the point that having these two hats that the EIB wears on the public sector side for implementation of policy and regulatory frameworks, and on the private sector side, supporting also the banks themselves, the financial institutions, and the microfinance institutions in terms of gearing up to the digitalization drive. So let me hand over now the floor to Aymen. Over to you, Aymen.
Thank you very much, Carmelo. Good morning, everyone, and very happy to be here with you. So I will speak about the study we are actually running with for the EIB about the digitalization project in Africa and the major trends related to those digitalization projects. So let's start with some global trends on digitalization in Africa. We made each year a study about the digitalization of the world and the Africa, and we have identified 8 major trends in Africa that are aligned with the global trends. But let's focus on 2 major trends that are important, I think, for the financial sector. First, the use of the cloud has increased due to the COVID pandemic. IT infrastructure expenses have decreased by 10% over the period, and at the same time, cloud spending has increased by 25%. And we estimated that the cloud will continue to grow with 30% more revenue each year by 2025. This will certainly drive some new applications in the financial sector with major challenge, particularly legal ones regarding to the protection of personal data. The second trend, which is interesting, I think, is related to the virtual reality that is gaining ground with important fields of application in localization, of course, but not only. Virtual branches, virtual customer advisor, localization of the banking services. We can have tomorrow our bank branch in our living room with the same quality of service as in the branch. And this, I think, will change the nature of services that bank provides to their customer. There is some of other technological trends that are expected in the next year around data, of course, and its dynamic use, but also, I think, as Claudio said, around security challenges and around cybersecurity challenges, and they will shape the next coming period investment in the world and in Africa in particular. So to capture these trends, as well as the major digital transformation project of the financial institution, EIB that launched a vast study that aims to identify the major infrastructure and digitalization project of the financial services and financial institution in Africa. This study has allowed us to identify some trends, and we have some first results that we will share with you in the next coming slide. And of course, I think the study will be available maybe in the next coming weeks. So let's start maybe with a quick overview of some financial and macroeconomics KPIs. I think they are very important for the context in the Africa region. So those KPIs, I think, confirm the low rate of banking inclusion and the dominance of cash in transaction, especially with the important part of the informal sector in African economies. As you see, we have 36% of the part of informal sector in GDP, and the utilization of cash is around 95%, which is very huge. From another side, the internet and mobile payment continue to increase their penetration in the African market. More than 500 million mobile payments accounts already. Half of the global service provider are present in Africa, and the digitalization of payment are accelerating more and more. This is a major trend, I think, for the next coming years, and I think we will see the effect of the trends on the infrastructure, on the bank projects, but it will shape, I think, most of the trends that we will see in this year and in the next coming year. So in this context, we identified some emerging trends in Africa, and we have chosen to zoom in on 4 of them that we believe strongly impact the financial sector. First one that we will talk about is related to the development of neobanks. Neobanks offer a banking package with technology that ensure speed and ease of use. These payment fintechs also offer innovative tools adapted to each customer segment. For example, Africa Pay, which is the first digital banking solution in 20 African countries and offer some scalable, adaptive, personalized, and simple service for its user. There is several other examples in Africa, and we think that the number of neobanks will continue to rise in the future and will be a serious challenger for classic banks, but also maybe an opportunity for them to reinvent their business model and to propose some innovative offers in collaboration with those fintech and with those innovative neobanks. Digital transformation of bank will be also accelerated in the coming years with deep, impactful project, but which will be mainly based on new technologies such as blockchains or cloud rather than traditional infrastructure. This, I think, will change the configuration of the bank IT infrastructure and push them to rethink their IT infrastructure and to develop them around new technology. I think in the past we saw a period that bank implemented some global bankings based, I think, on classical infrastructure technologies. But I think in the next coming year, this will change a little bit around um, new technologies and new IT infrastructure based on those new technologies that are more scalable, more flexible, and offer more innovative solution for the customer. The third trend is around digital identity. With half of the world populations now connected to the internet, the coming years will see a steady increase in online engagement as consumers adapt a digital approach to economic and social activities. For the majority of people in sub-Saharan Africa, the lack of a verifiable identity remains a major barrier to the full participation in the digital economy. Sub-Saharan Africa is home to only 1/6 of the world's population, but half of the world's undocumented population lives in this region, which made the digital identity a big challenge for those countries. This is why more and more projects to create digital identifiers, especially national one, are emerging, as in Rwanda, for example, or Congo, where cross-functional identifiers are being built. And that will drain several other innovation in financial product and facilitate the KYC operation and the online transaction, of course. And this will help particularly the payment system development. So the development of payment system is accelerating in the coming year, notably with the development of interoperability in countries, but also through regional projects. Those projects will leverage the mobile and the digital payment adoption and also promote, we think, the financial inclusion of the population. So we actually see some major projects, some of them regionally, as you can see, and those projects, I think, will leverage the utilization of the mobile payment and the development in the mobile payment in the countries, of course, but in general in the African regions in general. So what next? I think payment, as we have repeated, will be one of the major fundamental trends over the next few years, with an increasing number of users and the ongoing improvement of the infrastructure. As you see, 1 billion people are expected to use a mobile payment application worldwide by 2021, and over $1.9 billion processed daily by the mobile money industry. And in Africa, these trends will be more important due to the development of the internet penetrations and the development of the internet cost and the mobile internet cost in the African country. So the payment will be accelerated, and the acceleration is due to the development, as we say, of the interoperability infrastructure project, of course, but also the development of the government payments through mobile. Here we talk about G2P payment, P2G payment, which are some great accelerator of the adoption and the utilization of the mobile payment in the world, and in particular in Africa. So interoperability from one side, I think also government payment from other side will help the development of the mobile payment, and will leverage them in the next coming year. So what we expect then, the wave of standardization, I think, will come in the next year. Particularly, regulatory standardization will continue to operate to improve the legal framework of the mobile payment in Africa. As we see right now, we think that some of the legality framework are not very adapted to the development of the payment in Africa, and we know that there is several government and central banks that actually work to improve the legal framework and to work in several subjects like revenue sharing between the different operators, and also to standardize some mobile payment services. But also the improvement of the payment platform with the development of new models will help also the development of fintech and the payment actors. So we see some new models like open payment platform that start raising in some projects, or also maybe some platforms as a service, which I think can be very helpful for the development of the payment service. But also, let's say, we'll see, I think, a reconciliation between traditional banking ecosystem and mobile payment ecosystem, because in the last years, we saw that those ecosystem work separately. So traditional banking continue to develop their activities. They try to digitalize some service and offer to their customers some new digital services. And from the other side, we have some mobile payment industries that continue its development. And I think, as it was said, we start seeing some common project and some common collaboration with the two ecosystems to provide value-added services to the customers and to help the development of the payment economy and in general in Africa. And those projects and those initiatives, we think, will help the financial inclusion of the unbanked population in Africa, particularly, of course, the rural population, but also a young and highly connected one. But we think also that the development of payment and the initiative like G2P and P2G in mobile payment will not be sufficient for to help the development of the mobile payment. Government have to continue to invest in communication, to invest in financial education of the population, because it's important for the adoption and the development for the mobile payment in Africa, but also in the digital inclusion of population, which is still a big challenge in the African countries. So we think that the acceleration of payment and the digitalization of the financial services includes the implementation of the digital transformation project in financial institution will continue and will be accelerated in the next coming year. But we will have some big changes related to the technology used and the approach that the financial institution will adopt. Those projects must be part, we think, of a digital vision and a clear strategy and a clear digital strategy, which is not always the case, unfortunately, but also be based on sustainable and innovative solution. And above all, they have to be driven not by the technological need or technological approach, as we can see sometimes in some project, but they have to be driven by the improvement of the customer experience and based on the customer needs. This will allow those projects to be adopted and to be used in final by the customer. And this was relying on common infrastructure development projects such as payment and interoperability that will have to follow in order to support the evolution of the payment ecosystem. So maybe to summarize, I think most of financial institutions have maybe to rethink a little bit their digital strategy, or to set up their digital strategy, taking into account the actual legal framework, but taking also into account the project related to the global infrastructure in their countries, and also including some new technologies, some also collaboration with the fintech and the new mobile payment institution in order to provide to the customer a new and improved experience. And I think this will be, in fine, contribute highly to the financial inclusion in the African country. I think I come to the end of my presentation, so I give the word Carmelo. Thank you very much.
Thank you very much, Aymen. Very comprehensive overview of the digitalization and digital payment system. Of course, we're within the East African context. This is particularly important because we see Kenya obviously at the forefront with the M-Pesa revolution that has really brought about a revolution across the whole sub-Saharan African continent. And perhaps then from there, I can start with the first question. And obviously, there are concerns. Can these banks afford these digital investments? Armando Sirola is making obviously the question: can some of these MSME, which are perhaps not larger corporate banks, but much smaller in size, obviously with more limited budgets, can they afford to support digital investments? And does it make sense? So maybe you can answer that question. I mean, whether that, the digitalization, the needs for digitalization investment outweigh the needs for investments or the budgetization of funds for this purpose.
Yeah, of course. Thank you very much, Carmelo. Very interesting question. But I think what we saw in Africa, that there is two trends. Let's say, first of all, I think middle and small enterprise in Africa are very convinced about the interest of digitalization, and in their mind they have digitalize their process. But in fact, when we see the project and the budget allowed to digitalization, it's still very low regarding to the importance they give to the digitalization transformation and digitalization process, because maybe they have other priorities in the commercial development, or maybe some priorities related to some regulatory project. But actually, there is a lag between the importance of the digital project given by the top management and the budget allowed to some digital project. I think also the problem come from the customers. They maybe some medium and small enterprise work on their digitalization, but forget also to work with the customer to help him to use digital products, and there to have some return on their investment. So I think in the next coming year, maybe small and middle enterprise will have to allow more budget to the investment, and I think they started to do it thanks to the COVID pandemic, and maybe also to work with the customer to improve a little bit its experience.
And I guess, yeah, it's all about cost cutting and cost efficiency in terms of also revenue generation. If you're looking at it from the bank's perspective, the fact that you're investing heavily also from new digital streams, you're also going to incur a reduction of cost, also transaction costs for the customer, which will bring in more customers. So you increase the customer base, and you will also increase your revenue streams, because more customers, obviously, being able to access financial products will enhance also the profitability of some of these banks. So it's all linked to cost reduction on the one hand and new revenue streams on the other. I guess that the two go hand in hand. And that's probably what exactly led to the success of M-Pesa. Claudio, a question for you from Patrick Masumbuko. Can you comment why East Africa has a much higher uptake of digital mobile money service compared to the rest of Sub-Saharan Africa?
Sure. Thanks very much, Carmelo, and thanks, Patrick, for the question. The reason is, let's say, quite simple, in the sense that East Africa was like a forerunner back in the days already, thanks to M-Pesa. And of course, at the beginning, this environment was like new, and they actually managed to leapfrog many of the financial services that were like actually offered in other advanced financial sectors, such as like in the European markets and the American markets. So I think that gave the first push. And the second reason is also in terms of like mobile accounts distribution. If I remember correctly, the GSMA mentioned that I think that approximately 50% or more of mobile money accounts are registered in East Africa, whereas this share, that the other 50% basically is completely split amongst the other three regions. So I think that this is like, the two main reasons are those. So mobile M-Pesa as a first operator that increased and grew in the market, again, pre-COVID. So before all this digital revolution, they actually kicked the digital revolution, and the increase in mobile money accounts. Also, there is also the something that needs to be also flagged is that whenever also that what we saw ourselves as well, that when we began the first investments that we did in, for instance, in venture capital funds, were in East Africa, actually in Nairobi, in Kenya, and they were supporting like fintechs and innovative startups, specifically in the market, in the East African market. So let's put it this way: this is where all this began, So yeah.
There's going to be quite an interesting debate coming out of this, because obviously the fintechs against the banks competing against each other, will they merge or will they continue to compete and obviously lower costs for the customers and bring in more financial inclusion? Well, we've come to the end of the session. I would like to thank you very much, Aymen and Claudio, for the very, very exhaustive presentations that you provided. I think the debate is still continuing. We will have further discussions on this, but thank you all, and thank you all to the audience as well for the questions.